This is Charles Johnson, National Editor of Farm Journal and Top Producer Magazines. In 2 days of meetings at Informa Economics Grain and Oilseed Transportation Conference in Memphis, Tennessee, the world economic recession dominated discussion. It was clear, though, that some pretty sharp folks still are not exactly sure where we're headed or how long it's going to take us to get there. Bruce Scherr, the chairman and CEO of Informa Economics, said he believes that we're about halfway through the recession at this point in time, and he believes we're in the midst of a 22 to 24 month recession. He wonders how robust the economy will be post-recession, and he says we've lost equity in so many places that we have to deleverage, and he thinks stricter regulations may hurt stricter monetary regulations may hurt business when we come out of the recession. He believes that we'll do less than half the normal economic growth when we do exit this recession. He thinks the economy's turning around, that government spending is just beginning, but that he says, things are still questionable as we move forward. Eric Starks, president of FTR Associates, a group that analyzes the trucking profession, says the slowdown in freight demand has been dramatic, that things look awful for the trucking industry. He says historically the industry expects freight to grow 2% a year, but that they're projecting freight traffic to be down 10.5% in 2009. He says almost 1/4 of the truck fleet is sitting idle, that there are over 3 million trucks in this country, and probably, he says, we have 600,000 too many trucks in the system. As a result, truckload rates are coming down. He thinks that it's going to be difficult for at least a couple of years for trucking companies to push rates up at a substantial pace. He says that publicly owned trucking companies are shedding equipment at a fast pace, and that alarms him. This equipment's going in the secondary market. A lot of idle trucks out there could provide a good opportunity for someone looking to buy a truck. Ken Erickson, Informa Economics Vice President for Transportation, said that shipping grain to Japan, which cost well over $150 a ton just a year ago, is now going for about $20 a ton from the Pacific Northwest and $35 a ton from the Gulf. He said there are 6,700 dry bulk ships on the oceans, and more than 3,000 new ones are on order. Many of these were due to be built in China, which is now the world's biggest shipbuilder. Erickson said that at one point in 2008, 90% of all the grain going to Taiwan was shipped in containers. Now, because of the freight rate situation, only 20% of the grain going to Taiwan is shipped in containers. He said that in 2008, 4.5% of all U.S. corn and soybeans was exported in containers. He rather doubts that we'll reach that level in 2009 because there's a surplus of containers all over the world due to the economic downturn stacked up on docks. Erickson also talked about the barge situation on the Mississippi and Ohio rivers. He says this is the 10th consecutive year of declining numbers of barges, that 28% of the barge fleet is at least 25 years old. That 28% he believes could be gone within 5 years, the way things are going. Erickson also noted that northbound fertilizer on the Mississippi River has declined dramatically, that it's running about 30% behind last year's volume at this time. He says there's still a lot of barges that are holding high-priced fertilizer out there. Matthew Rose, the BNSF chairman, president, and CEO, says that the first quarter of 2009 saw a 14.5% decline in rail freight on his railroad, and that the overall rail industry was down by 18% in the first quarter. He says you have to go back to 1980 to see a recession with a similar decline in the rail industry. He calls for more capital investment in railroads. Rose says that railroads need to make $135 billion in capital investments to meet projected demand by 2035. Now, talking about the recession, he said that he doesn't have a clue what's going to happen. He says that the fellow CEOs he talks to, none of them believe we're going to see any growth in 2009. The majority of them believe it'll be the second half of 2010 before we come out of this recession, and we may not do it by then. The railroads are in the midst of a big slowdown, shipping slowdown now. He said that Class 1 railroads have 200,000 rail cars parked right now. BNSF has 43,000 rail cars parked and out of service at this time because of the freight downturn. That's out of a total of 1.4 million rail cars across the nation. Mr. Rose says their biggest problem is finding a place to park all that surplus equipment. Several speakers at the conference say they expect a second-round economic stimulus package from the Obama administration before midterm elections next year. If that's the case, everyone hoping to get a piece of that pie had best get in line right now. This is Charles Johnson reporting from Memphis, Tennessee, for the editors of Farm Journal and Top Producer magazines.